This is LJ Trades here. This is my first ever trade breakdown. And yeah, hopefully you guys enjoy it. Hopefully you can, you know, take some ideas from this, you know, maybe put it towards your own analysis, maybe, you know, review it yourself yesterday and have a look what you've seen compared to what I've seen. Yeah, this is going to be an interesting start. This is the first time I've ever come to social media. You know, I'm going to share my journey during my trading career. I do work at the minute currently, so, you know, as much content as I can possibly get out is what I'll do. But for now, I'm just going to be posting just some trade breakdowns, maybe some analysis for the later part of the weeks, and yeah, hopefully you guys enjoy. So let's get straight down into it. So I was trading NQ yesterday. Looking on the weekly, price come into this, looking into the weekly last week, price come into this weekly fair value gap, which is perfect price action. Also closed above this swing low here, you know, so we're respecting bullish PDOAs right now, which is great, which shows bullish intention. So, you know, bias for me is bullish on the weekly. And, you know, for all my strategies, for my strategy to work and for my own rule set, is that, you know, the more time frames that align together, the more than likely you are to win. You know, in all scenarios, you know, price has been bullish for weeks. If we drop down to the daily now, you know, we've had this pullback like we have in every single bullish leg. So we've had this pullback come into a weekly fair value gap. Then prices projected all this bullish momentum here and finally left us a price to retrace into. So now you've seen the weekly, we're on the daily. So prices created this fair value gap here. This was on Friday, so perfect. Looking into Monday on Friday, so I thought over the weekend, Monday has got to come into this low, or maybe Tuesday, or maybe Wednesday. Regardless, price is coming into this low. Price then tapped into this gap on Monday. The 4 hour looked choppy, so did the 1. So I'm going to do most of my analysis on this trade breakdown on the 15. So you can see it all happening here. It all looks a bit maybe mad at the minute, but I'm going to try to explain it as simply as I possibly can. So breaking down into it. London created these equal highs with Asia. Then price respected this 15-minute gap coming into New York Open. Price took this internal low here on New York Open. This is the 9:30 opening. Still respecting this 15-minute array. Then price displaced higher here, creating this new 15-minute gap. Right, now we're in the kill zone. This is where I kind of wanted to start entering my trade. So I kind of scaled down onto the 5. You know, did I see anything? You know, there was a gap that aligned with the 15, you know, so I was waiting for price to really come into this 15-minute gap. Now, dropping down onto the 1 minute. Right, so you can see price at the sell side there. Give this major impulse shift here. Now, why didn't I enter down here? So, I do like to trade with limit orders. You know, market execution is great, you know, but for my rule set, for my psychology, I just prefer that price comes into my area rather than me thinking, you know, price is going to run to this high, then come back down, probably sweep this low again. You know, so for me, it's just a matter of how I prefer to trade. But regardless of that, so the 9:30 was here. This was the opening price candle here. So it come up, took out this internal low, come down and took out this sell side liquidity, which is where I wanted price to sweep. You know, still respecting this 15-minute gap as well. So, you know, and we are in this daily area. So, you know, you got to think price could, you know, in my opinion, price can reverse in anywhere within this gap. But within this area, we are looking for buys. So you can see here, price then come up and then took out this internal range again. So price took out this internal high. You have London highs just above as well. So I didn't want to get in because, you know, if I was to just say set my order here, which in this instance, you know, you probably still would have grabbed a 2-hour trade. You know, even maybe cover into this candle body low here. You know, you'd have got a 1.7, but for me, regardless of where your entry would have been, price took out this high. I would never enter after price has taken a high. You know, this just puts probabilities into my favor. Price is now taking a high. It could possibly come down, you know, retrace past this low, then go up. You know, as I said, this whole area is classed as a reversal area. So then prices come up here. The 10 o'clock candle opens. So it was consolidating here. You know, this is why I wasn't, you know, I was waiting to see some cleaner price, maybe a deeper retracement into this. Now, you know, now we've definitely created some bullish structure. Pricing comes down. This is at the start of the 10 a.m. candle. So this is an open low, high close. This is a perfect example of that on the hourly. So price opened here on the hour, come down. Now around about 10:30, you know, we started to see this perfect displacement here, and then price perfectly displaced back up. So through this IFVG, yes. Now this is where you definitely could have got an entry, which would have been here, and targeting or putting the stop on these body lows, targeting, you know, the buy side liquidity here, or, you know, further on targets, which were, you know, there was plenty of targets to target, really. You know, you had all of these highs here, which, I mean, did get taken, but, you know, you have all of these 5-minute highs. The main high was this, which is what I will be targeting today, if we get the setup. But dropping back down to the 1 minute and sticking with this. So let's not go off track here. Oh, let's not go off track. I'll just draw boxes and everything, by the way, so there's never any need for me to get trade and view plan. There's no need. So price displays down, and then price displays straight back through this. You know, this is clear example for reversals. You know, an expansion met with an expansion is a reversal. So this is exactly what we have here. You see this here, this was the 15-minute gap displaced. Now, the reason why I didn't enter off this IFVG is because I wanted price to close back above this area to make sure, you know, price was going to close above the 15-minute. You know, if we had a closure below, you know, it was possible that, you know, price was going to come take these lows again and, you know, start reversing back to the downside. But it wasn't. Price then come up and closed above here, as you can see. Now, this is where I entered off of this breaker. My stop was originally at these body lows, which would have been the bottom of the breaker, which for me invalidates the trade. Once price then created this protected swing low on the 1 minute here, I did reduce my risk just due to the consolidation of the consolidation around my entry. So I did just have it just below this swing low here, and I was targeting just a static 2R, which hit within the matter of, you know, 2 minutes straight after my it was actually here I targeted this high here, you know, which closed out for about 2.8R, which is perfect. And I had reduced risk, which was, you know, even better in my opinion, because normally I target a 2R. So I actually grabbed some extra profits there, which is great. And then price, you know, continued to rally upwards and upwards and upwards towards, you know, the weekly target, which is where we've seen before. So hopefully you guys enjoyed this trade breakdown. This was Monday the 2nd of December, and hopefully I can catch you on the next one.